This is Taking Stock on Bloomberg. I'm Pim Fox. Now, ever wonder why you make the same investment or trading mistakes, have trouble being patient with an investment? Well, my next guest might be able to help. John O'Donnell, he is the Chief Knowledge Officer of Online Trading Academy. We also have Eyal Shahar. He is the founder of Online Trading Academy. Gentlemen, welcome to the program. Eyal, John, good to have you with us.
Thank you.
Eyal, let me come to you first and put it to you. This is a behavioral business? Are the issues that really plague investors and traders from making good decisions, is this an emotional issue with them? What have you learned?
Very, very much so. It's more a psychological game than anything else. You know, when you trade, you really trade against yourself, not against the market. You know, people used to think that the market is their enemy, so to speak. Like, they know if I'm in, they're going to take my money or not. The reality is that it's not. It's really a psychological game more than anything else. So here's where a pattern really starts breaking. When people really want to manage risk, their mindset is actually the biggest enemy. So you take a position, and your ego is usually confirming the decisions that you like to make. So you buy something, you want to tell everybody how great that is. Well, in stocks, you can't need to be right. So you put your money somewhere, and there shouldn't be any room for you wanting to have something happen. And the second that you really want something happen, you look for confirmation that you're right. And now you're attached to your decision and sticking with the stock, despite of what the market is telling you if you're listening to the market, just in order to be right. You know, if you're married and, you know, you see a couple argue just in order to be right in a conversation, despite the actual, you know, substance of the argument. And our ego is so overwhelmingly strong to be righteous, to be correct. We like so much to be right and make other people wrong in the process. And therefore, we have a hard time listening to the market. When you really want to trade well, you must listen to the market and override the fact that you actually made a decision to open a trade.
All right. Well, let me come to you, John, because I know that you've got a lot of practical experience trying to help people get over some of these issues. I mean, how do you actually move away from this issue of, I want to be right in whatever investment you've decided to make?
First thing we can do is get people in touch with the fact that there is a gap between their perception and reality. And they have to control, temper their emotions. And you're right, the market is always right. And Eyal hit it is spot on. You and I have to accept that the market is always right. It's you and I that are wrong. So we've got to predetermine, have a written trading plan, and have a plan on when to get out. You know, when I enter a trade, what I ask myself is, how much wrongness can I afford on this trade? What most people do when they enter a trade, they start thinking about, how much am I going to make on this trade?
They figure, they like to think of what they're going to do to spend all that money that they're going to make.
That's correct. What I want to do is be surprised if I'm correct. You know, professional traders, I mean, the pros on Wall Street, they don't make money on every trade, but they've learned how to lose money professionally. But if we started a school that said, I'm going to teach you how to lose money professionally, we'd never have anybody show up. But in fact, that skill is what we all need to learn, how to lose money professionally. The net result of doing that with patience, discipline, focus is we'll do extremely well at the end of the day.
Hey, y'all, when John talks about patience, discipline, and focus, I mean, give me one example if you can. How do you remain patient in a market that's constantly moving back and forth?
Well, I think the best mindset is to get to a point that you don't want anything to happen. It makes no difference if it goes up or down, and you play both ways. But risk management is really a key element. When you really don't get attached to your trade, you know, the biggest problem that investors have when they open a position and they want to take a specific stop loss, for example. Let's assume 20, 30 cents, 50 cents is my stop loss. At one point in the future, they'll be wrong. So let's assume they take the stop loss, and then they're wrong. They do it once, twice, 3 times. After the 5, 10 times, they say, I'm done with it. I'll just stay until it recovers, and then they take a big hit.
That's the way a trade turns into an investment, right?
Yeah. Right.
All right, we're going to continue the conversation. It sounds easy to make a trading plan and stick with it, but there's more. We're going to talk more about the emotions. We're going to find out if there's something that you can do to ease the pain of investing.
Everything we're doing at the SEC now is geared towards trying to reorient the agency towards investor protection. We've spent a lot of time, I think, historically worrying about capital formation and the ability of U.S. businesses to compete internationally, and those are all important. But right now, our focus is very much on restoring and rebuilding investor confidence, which frankly is critical, I think, to the success of our economy.
That was SEC Chairman Mary Shapiro on increasing efforts at her agency to protect investors and build investor confidence. This is Taking Stock on Bloomberg. I'm Pim Fox. My guests are John O'Donnell. He is the Chief Knowledge Officer of Online Trading Academy, also the founder of Online Trading Academy, Eyal Shahar. Eyal, you know, we were talking really during the break about trying to, in a sense, connect different mindsets with different types of investing, because there might be certain styles of investing or certain styles of trading that are not suitable for certain people. How do you find that out?
Well, you know, in the classroom environment, people get to learn how to trade multiple time frames, and then they really see what fit them. You see, it's really an internal game. So everything that you are when you trade, expand 10 times fold. So if you're a real risk taker, you'll go wild, you'll go into things you shouldn't get into. And if you're reluctant to make decisions in your life, you'll just sit there, and even though you'll have a great opportunity, you wouldn't pull the trigger. So you got to really match your personality with the time frame that you're trading to really be effective for you, because it's really your internal game. It's you against yourself more than anything else.
John, talk about this issue of pulling the trigger, because in fact I think you and I have spoken in the past about how there are some mindsets, some individuals, they can't pull the trigger. I mean, and they'll spend all their efforts trying to figure out what the right trade is, but they'll never do anything.
Yeah, we call that paralysis through analysis. You just, you know, you get so much information in front of you, and, you know, you're never going to have a perfect buy or sell decision. What we teach in our classes at Online Trading Academy is look for the weight of the evidence. What is the weight of the evidence? Do I want to buy this security right now? Do I want to short sell it right now? What is my risk? What is my reward ratio? And we set up a risk to reward ratio in a written trading plan. And we take a position, but you have to be definitive about it. I like to make the assumption on every trade that I make that I'm going to be wrong. I'll just take that from the get-go. And I'm willing to predefine what I'm willing to lose on the trade before I ever take the trade. But you're right. I can't tell you how many people come to our class, and we have to actually coach them. And that's a psychological barrier, because they don't want to be wrong. And they're beating themselves up about, well, my 401k's become a 201k, and they don't want to take individual responsibility for the fact that they allowed their 401k to become a 201k because they don't have
Well, the market did it to them, right?
Yes, or their broker,
or someone else.
Or they won't look in the mirror and take individual responsibility for their own actions or inactions. And you're talking about at least 70% of the challenge to be successful is psychological.
Now, Eyal, one of the things that we've spoken about is the types of individuals that might make good traders. I mean, do you see any trends? I mean, for example, are women better traders than men? Because is there an ego situation there that maybe we can learn something from the other half of our brains?
I can tell you that the more opinionated you are, the more righteous you are as an individual, the more you get really, you know, a great pleasure in making other people wrong, the less of a chance you have to become a trader. To be a good trader, you need to be in tune with the market. You need to listen to it and react to it. And it's mostly about risk management. So getting about, you know, the previous question is when to enter. The biggest question is when to exit. Because even if you're wrong 50% of the time, but you always get out fairly quickly after, then your losses will never be too much. And the discipline of doing it is what makes a trader really successful. So we're finding actually that women become better traders faster than men. They have a lot less ego in their mind. They see something wrong, go, okay, I'm wrong, and they're out of it. And they evolve faster to become better traders. They're a lot more disciplined. So disciplined cultures would be helpful if you grew up in a family that is more disciplined. You just react to something and you're consistently doing that. That'll be helpful.
John O'Donnell, let's say you got a trade, it's going against you, and you get this feeling that you're going to get the market, that you're going to teach the market something. What do? Do you get up and just literally walk away from the computer screen? Well, give us some example. What's a way to fight that feeling?
How many of us have wanted to get even with Acme because one day we had a position in Acme, it went against us, it hurt us deeply. And again, we've developed this relationship with the end result. You need to be unattached to the end result. Now, that's easy for me to articulate. It's difficult for all of us to execute. And it takes practice and coaching to get unattached. It's meaningless that Acme just kicked your rear end. It's meaningless. If you're going to trade from a position of, I'm going to get even with Acme, the best thing to do is just leave it alone. I mean, it's, you know, Acme in this particular example is like a bully in the neighborhood. The bully hits you in the nose. Now you got a neighborhood. Now you're going to go find a bat as an equalizer, and you're going to get even with Acme.
We know unfortunately, we know how that story ends up. All right, I want to thank you, gentlemen, very much. Eyal Shahar, the founder of Online Trading Academy. John O'Donnell, the Chief Knowledge Officer of Online Trading Academy. Appreciate you coming and sharing your insights with us.